Welcome back to Investing Talk Podcast. I'm betting a lot of you are here because you've heard about Organogenesis Holdings,
Yeah,
ticker symbol ORGO.
definitely a company making some noise.
This regenerative medicine company's got people talking, especially after that stock price took everyone for a ride.
Investors are definitely paying attention.
So what's the big deal with Organogenesis Holdings? Well, they're developing some really exciting technology.
Yeah, cutting edge stuff.
Advanced wound care and surgical solutions. Real game changers. But as any smart investor knows, big potential often comes with some big risks.
You always got to look at both sides.
That's why today we're going to unpack their recent performance, see why the market is reacting the way it is, and help you figure out if this company is worth your attention.
Should be a good one. To really understand what's happening with Organogenesis Holdings, let's start with their story. They're a leader in the field of regenerative medicine, which is a rapidly growing area
It's growing fast.
focused on repairing or replacing damaged tissues and organs.
So that sounds pretty futuristic. What does it actually mean for their products, though?
Essentially, they're developing treatments that help the body heal itself. Think chronic wounds that just won't close or damage tissues from surgery. Organogenesis Holdings is creating products that accelerate that healing process
Interesting.
using the body's own regenerative capabilities.
So they're not just treating the symptoms. They're actually helping the body fix the problem at its core. That's pretty amazing. No wonder people are excited about their potential. But let's get down to brass tacks. How's the company actually performing?
Well, their Q4 2024 earnings report was a real showstopper.
Oh, yeah.
They saw a 27% increase in revenue year over year.
Wow.
And even more impressive, they swung from a loss last year to a profit of $7.7 million this year.
Whoa. That's a remarkable turnaround. What fueled that shift to profitability?
Well, a few factors contributed to their success. First, both their advanced wound care and surgical products saw significant growth,
So it's diversified.
indicating a strong, diversified business. And their earnings per share were also way ahead of expectations, coming in at 7 cents compared to a projected loss of 1 cent.
Really?
This kind of performance tends to get Wall Street's attention.
It definitely got my attention.
Right.
And on February 28th, their stock price took off like a rocket, surging over 100% to hit a 52-week high of $6.74.
That's right. It closed the day at $6.21, up from just $3.07 the day before.
That's a massive jump. I'd be ecstatic if I owned that stock. But then it seems like things got a little turbulent.
There was indeed a significant pullback, dropping about 60% from that peak price.
Oh, wow.
That volatility highlights one of the key risks associated with Organogenesis Holdings.
So imagine you're on this rocket ship soaring higher and higher, and then suddenly you hit some serious turbulence. Would you hold on tight or bail out?
It's a tough call, and it really comes down to individual risk tolerance.
For sure.
But to understand why the stock reacted so dramatically, we need to dig a little deeper into what caused that initial surge.
Okay. Was it just driven by the positive earnings news, or were there other factors at play?
Well, the strong earnings report definitely played a role, but there was another element at work here.
Okay.
A short squeeze.
Okay, for those of us who aren't seasoned investors, can you explain what a short squeeze is and why it sent the stock price soaring?
Certainly, short selling is a way for investors to bet that a stock price will go down. They borrow shares, sell them at the current price, and hope to buy them back later at a lower price to return to the lender. The difference is their profit.
So it's a risky strategy that can pay out big if you're right, but can also backfire if you're wrong.
Exactly. Now imagine a stock with a high short interest, meaning a lot of investors are betting against it. If some good news comes out, like a blowout earnings report,
Like this one.
those short sellers can get caught in a squeeze.
Oh, I see.
They're forced to buy shares to cover their positions, which drives the price up even higher, creating a self-fulfilling prophecy.
Ah, so it becomes a race to buy, further fueling the price increase.
Precisely. And in the case of Organogenesis Holdings, the short interest was over 13%. So when that positive earnings news hit, those short sellers scrambled to cover their positions, causing that dramatic price surge.
That explains the incredible upward momentum, but then why the sudden drop?
As with most things in the market, it's rarely a straight line up or down. After that initial surge, some investors who had bought in early decided to take profits, leading to a sell-off and that subsequent pullback.
So classic case of buy the rumor, sell the news.
Exactly. But this roller coaster ride raises an important question.
Yeah.
Is Organogenesis Holdings just a hype-driven play, or does it have solid long-term potential?
That's the million-dollar question.
Yeah.
And I think that's where we need to dive next.
To answer that, we need to look beyond the short-term hype and dig into the company's fundamentals.
Yeah, got to see what's under the hood, right?
Exactly. One crucial aspect is their financial stability.
Right.
And in that regard, they made a significant move back in November 2024.
You're talking about that $130 million private placement they secured from Avista Healthcare Partners.
That's the one.
That was a major infusion of cash.
It was, and it tells us something important about how a major player in the healthcare investment world sees Organogenesis Holdings.
Okay.
Avista is known for its rigorous due diligence, and their investment suggests they see genuine potential in the company's technology and market position.
That's a good sign. So how did Organogenesis Holdings use this investment?
They wisely used about half of it to pay down debt, strengthening their balance sheet.
Smart.
The remaining funds are earmarked for growth initiatives, particularly the development and potential launch of their product, Renew.
Okay, let's talk about Renew. It seems to be a major focus for the company. And you mentioned it earlier in the context of their BLA submission.
Right.
Can you break that down for our listeners who might not be familiar with the pharmaceutical world?
Think of it like this: Renew is a promising new drug with the potential to revolutionize wound care. But before Organogenesis Holdings can bring it to market, they need FDA approval.
Makes sense.
That's where the BLA, or Biologics License Application, comes in.
Right.
It's basically a comprehensive document outlining all the research, testing, and safety data for Renew.
So it's like a big exam for Renew.
You could say that.
If it passes, it gets to go to market. And this submission is expected in 2025.
That's right. The FDA review process can take time. But if Renew gets the green light, it could be a game changer for Organogenesis Holdings, opening up significant new revenue streams.
This all sounds very promising, but FDA approval is never a sure thing. What are the chances Renew actually makes it through the process?
That's a crucial question.
Yeah.
While the data from clinical trials has been encouraging, it's important to remember that the FDA sets a high bar for safety and efficacy. There's always a risk that Renew could face unexpected hurdles during the review process.
So investors need to temper their enthusiasm with a healthy dose of realism. It's not a done deal until it's a done deal.
Couldn't agree more. But let's broaden our perspective for a moment. Even if Renew faces challenges, Organogenesis Holdings is operating in a sector with significant tailwinds. The regenerative medicine market is projected to grow rapidly in the coming years, driven by factors like the aging population and the rise of chronic diseases.
So even if Renew isn't a home run, they're still playing in a very promising field.
That's an important point. However, we also need to acknowledge the challenges and risks they face. The wound care market is highly competitive, with several established players vying for market share.
So it's not just about developing innovative products, it's also about navigating a complex and crowded marketplace.
Precisely. They need to be able to effectively market and distribute their products, secure favorable reimbursement rates from insurance companies, and stay ahead of the competition in terms of research and development.
You mentioned reimbursement rates. Earlier, you also talked about something called local coverage determinations, or LCDs. Can you explain what those are and why they're important for a company like Organogenesis Holdings?
Sure. LCDs essentially determine whether Medicare and other insurance providers will cover the cost of a particular medical product or procedure.
I see.
For a company like Organogenesis, Holdings securing favorable LCDs is crucial. It directly impacts how widely their products are adopted by healthcare providers and patients.
So it's not enough to have a great product. They need to convince insurers that it's worth paying for. That adds another layer of complexity to their growth strategy.
It certainly does. And there have been some delays in obtaining LCDs for certain Organogenesis Holdings products, which has impacted their revenue projections.
So it's a mixed bag. On the one hand, they have a strong financial position, promising technology, and are operating in a growth market. On the other hand, they face stiff competition, regulatory hurdles, and reimbursement challenges. It sounds like a classic high-risk, high-reward scenario.
You could say that.
Right.
Which brings us back to the question that's likely on many of our listeners' minds.
Right.
Should I invest in Organogenesis Holdings?
That is the question, isn't it? And as with any investment, there's no easy answer. It all depends on your individual goals, risk tolerance, and investment timeline.
Right. There is no one-size-fits-all approach. Some investors might be drawn to Organogenesis Holdings' potential for explosive growth, especially if Renew receives FDA approval. Others might be more cautious, preferring to wait and see how the company navigates those competitive and regulatory challenges.
So let's break down a few potential investment strategies. For someone who thrives on excitement and is comfortable with higher risk, what would a short-term trading approach look like?
Short-term trading for Organogenesis Holdings would involve trying to capitalize on the stock's volatility, which we've already seen can be quite dramatic.
Hmm.
This approach requires close monitoring of the stock price, looking for opportunities to buy low during dips and sell high during surges.
That sounds like it would require nerves of steel. What are some key things a short-term trader should watch for with Organogenesis Holdings?
They should keep a close eye on trading volume news flow and overall market sentiment. For example, any updates or announcements regarding the Renew BLA submission could trigger significant price swings.
It's all about timing the market, which can be incredibly difficult.
Hmm.
What about investors with a longer-term perspective? How might they approach Organogenesis Holdings?
A long-term investor would likely focus on the company's fundamentals, their technology, their market position, and their long-term growth potential. They'd be less concerned with daily price fluctuations and more interested in the company's ability to execute its strategy and capitalize on the growing regenerative medicine market.
So patience is key for the long-term investor. They're essentially betting on Organogenesis Holdings' ability to become a dominant player in this emerging field.
Exactly. But regardless of your investment style, whether you're a thrill-seeking short-term trader or a patient long-term investor, one principle always applies.
Okay,
Manage your risk.
couldn't agree more. What are some practical ways investors can manage risk with a volatile stock like Organogenesis Holdings?
The most important thing is to never invest more than you can afford to lose. It's also crucial to diversify your portfolio, not putting all your eggs in one basket.
Right.
And consider using tools like stop-loss orders, which automatically sell your shares if the price drops below a certain level, limiting potential losses.
Those are all wise strategies for any investor. So we've covered a lot of ground today. We've explored what Organogenesis Holdings does, delved into their recent financial performance, unpacked that wild stock ride, and examined the risks and rewards of investing in this company. It's clear they're operating in a fascinating field with enormous potential, but they also face some significant challenges.
That's a great summary. Organogenesis Holdings is a company to watch in 2025 and beyond. Whether or not it's the right investment for you is a decision only you can make.
We've given you the information and insights to make an informed decision. Now it's up to you to do your own research. Consider your risk tolerance and decide if Organogenesis Holdings aligns with your investment goals.
And we would love to hear your thoughts. Let us know in the comments if you think Organogenesis Holdings is a buy, a hold, or a pass.
We always appreciate your feedback. And if you found this episode helpful, please subscribe to Investing Talk Podcast. Share it with your friends and leave us a comment. Until next time, happy investing.